In December 2024, Bitcoin achieved a historic milestone.
Price of a single Bitcoin has climbed above $100,000 for the first time.
And with the new US government taking a more crypto-friendly stance, digital assets are once again in the spotlight. But let's be honest, crypto is no longer just a short-term experimental trend. Over the years, it has proven itself as a legitimate asset class, gaining widespread acceptance from investors, institutions, and even governments. And the numbers speak for themselves. Since 2015, the value of Bitcoin has increased by an incredible 35,000%, while that of Ethereum has skyrocketed by an unbelievable 350,000. Yet, despite this, many investors still hesitate to enter the crypto market. And I totally get it. Crypto is volatile, unpredictable, and full of surprises. And with tens of thousands of coins to pick from, it can feel like finding a needle in a haystack. But here is the thing. It doesn't have to be complicated. Building a balanced crypto portfolio can actually be simple if you know what to focus on. So in this video, I will walk you through my personal crypto strategy, break down how I build my crypto portfolio, and show you exactly what I am holding right now. Whether you are just getting started or looking to optimize your portfolio, this video will help. So let's get started. If you're new here, my name is Srijit, and on this channel, we talk about travel, wealth and happiness, and sometimes crypto. Now, I'm not a financial advisor. I'm just a random guy on the internet talking about my experiences. So do your research before you act on any of the things I say here. But before I walk you through my portfolio, there is something important you need to keep in mind. We all have different financial situations, risk tolerance, and long-term goals. What works for me might not work for you. So understanding where you stand will help you make better decisions and avoid investing in assets that don't fit your plan. With that being said, let me show you where I stand. I started investing in crypto back in 2020. At the time, I was still exploring, trying to understand how digital assets worked and whether they were worth the hype. And the 5-year journey taught me one important lesson. There are basically two approaches to building a crypto portfolio. The first one is to build a diversified portfolio consisting of many cryptocurrencies. Although this helps to spread the risk, there is also an added advantage. It increases your chances of having at least one coin that performs exceptionally well over time. But this also comes with a trade-off. Since your money is spread across multiple assets, the potential gains from a single coin may be lower. And the second option is to maintain a highly concentrated portfolio, holding only a few carefully chosen currencies. The benefit here is that if you pick the right coins, your potential gains can be significantly higher. However, there is a risk. If you select the wrong ones, you could miss out on the gains that other cryptos in the market are experiencing. So this option depends heavily on you making the right choices. When it comes to my portfolio strategy, I personally choose option 2, a highly concentrated portfolio, and there are two main reasons for this. One, I don't want to invest in assets that I don't understand. When I invest in a coin, I want to stay fully informed about the technology, the team, and the future potential. Crypto is a fast-moving space, and having fewer coins helps me to closely track and understand each one. Second, I believe that the ultimate goal in this crypto game is to accumulate as much Bitcoin and Ethereum as possible. I will explain why. In the short history of the crypto market, more than 95% of the projects have disappeared, failed, or dropped to zero. Bitcoin, however, has stood the test of time and has the best chance of doing so in the long term. And not just that, Bitcoin dictates the trend of the whole crypto market. When Bitcoin moves up or down, every other coin follows its lead. Right now, my Bitcoin holdings are split between an online exchange and a hardware wallet. A major share, approximately 0.15 BTC, worth $15,000, is securely stored in my Ledger hardware wallet. I also keep about $8,000 worth of BTC in my Binance account. I use the hardware wallet for long-term storage, and I keep a percentage in Binance to take advantage of the short-term price movements. I recently cashed out a portion of my BTC after Trump's presidency triggered a price spike. However, I don't believe in constant trading. I follow a structured investment plan using a combination of 200-day moving average and Mayer multiple to pick optimal buy and sell points. If you're interested in learning more about my crypto investment plan, just comment below and I'll make a detailed video on it. Altcoins is a general term used to describe all cryptocurrencies that are in Bitcoin. This includes low-risk stable coins to high-risk meme coins and everything in between. Ethereum is the largest and most important altcoin in the crypto market, and for good reasons. Unlike Bitcoin, which is primarily viewed as a store of value, Ethereum is a decentralized platform with real-world use cases such as smart contracts, DeFi applications, and NFTs. And this is one project which is continuously evolving and improving. With major upgrades like Ethereum 2.0 and switching to the proof-of-stake model, Ethereum has become more energy efficient, scalable, and secure. This is one of the main reasons why I trust Ethereum long-term and why it's the only major altcoin I hold in my portfolio. Together, Bitcoin and Ethereum make up over 95% of my crypto portfolio, and I believe that they are the only two crypto assets that truly matter. That being said, there are also a few other altcoins that have caught my eye and I've allocated a small percentage. Now, Solana is one project that has been on a roller coaster ride over the past few years. At its peak in 2021, it was one of the hottest blockchain projects with a booming ecosystem of DeFi platforms, NFTs, and high-speed applications. However, during the whole FTX fiasco in 2022, the price of Solana crashed, and many wrote it off as a failed project. But Solana didn't die. Thanks to its fast transactions, low fees, and strong developer support, it bounced back stronger. Although I've sold a major share, I still hold a small fraction of it in my portfolio. Now, this has been a project I've been passionate about right from the beginning. The lead developer behind Polkadot is Gavin Wood, one of the co-founders of Ethereum. And from a technology standpoint, Polkadot is different because there are no other protocols that are attempting to achieve true blockchain interoperability, or in simple terms, connecting blockchains together with the level of security that DOT offers. But my main concern with Polkadot, or simply DOT, has always been on the financial side. I won't go into all the details, but at this point, I'm not entirely sure how successful Polkadot will be in the long run. I used to have a few more altcoins in my portfolio, but as a part of a simplification strategy I took last year, I sold most of them and moved that capital into Bitcoin. Stable coins are the angos of the crypto market. Coins like USDT or Tether and USDC, USD coin, are pegged to fiat currencies like the US dollar. So they maintain their value regardless of crypto price swings. They provide much needed stability in an otherwise highly volatile space, which is why I use them as cash reserves. When it comes to NFTs, the only one I ever invested was a Spider-Man collectible on Veve, which I bought just for fun. Luckily, I was cautious enough not to fall for the hype and never bought any monkeys or rabbits. I never saw them as a serious investment, since most projects were fueled purely by speculation and influencer marketing rather than any real utility or long-term value. I will take a moment to talk about meme coins as well. Coins like Doge and Shiba, even though they started as jokes or fun cultural experiments, they have gained massive popularity. That said, I have never invested in any meme coins either, and I don't plan to. Accumulating junk with the hope that someday it will go to the moon isn't my investment style. Maybe one day it will, but to me, it's more gambling than investing. As I've said before, the name of the game in crypto is to accumulate as much Ethereum and Bitcoin as possible. Everything else, distractions with much higher risk. But if you are considering investing in altcoins, here is something to keep in mind. Don't invest in new projects just because they are hyped. By the time everyone is talking about it, the real opportunity is usually already gone. So instead, focus on projects with real-world utility and long-term potential. Ask yourself these key questions before clicking on that buy button. Who are the key people involved in this project? What does the project actually do? Does it solve a real-world problem, or is it just hype? How does it stand out from competitors? How much money is it making? How fast is it growing? What are the tokenomics? Or how tokens are distributed, earned, and used within the ecosystem. The crypto industry remains extremely volatile, largely unregulated, and highly manipulated. And because of this, I would never advise anyone to invest in crypto without fully understanding the risk. That being said, at the end of the day, it's your money, your choice. If you decide to invest, it's important to educate yourself, understand the market, research your investments, and be aware of the risks involved. And most importantly, keep these 3 golden rules in mind. First, just like any other investment, time in the market counts, not timing the market. So instead of going all at once, spread your investment over weeks or months. This strategy, known as dollar cost averaging, reduces the risk of buying at a peak and smooths out volatility over time. Second, store your crypto safely. Exchange collapses and hacks are common in this space. If you're serious about your crypto investments, a hardware wallet is a must. If you want to know how to move your crypto to a hardware wallet, then you can watch this video. And finally, only only invest money in crypto that you are willing to lose. No one starts by putting all the assets into crypto. Most people are smart at first. But here is what makes crypto different from other asset classes. When we hear stories of 1000% or even 10,000% gains, it's easy to fall down the rabbit hole of greed. Before we know it, we start believing that this is a once-in-a-lifetime lottery ticket that we need to go all in before the opportunity disappears. Unfortunately, this mindset often leads to over-investing and taking unnecessary risks. So no matter how bullish you are, I suggest allocating no more than 5 to 10% of your investable assets into crypto. And remember, when we buy or invest in any asset, we are not just trading money, we are trading our time and peace of mind. Always consider the value of those things when making investment decisions. I'm excited to hear about tokens that you have invested in, so let me know in the comments below. I hope you got some value from this video. If you're interested in more content about building long-term wealth, then do subscribe to the channel. Until I see you with another video, have a wonderful rest of the day and adios.